Good luck trading today, and I'll see you all tomorrow. Good morning, everyone. Anne-Marie Band here. Today is Friday, February the 3rd, and this is the Moneyball Morning Report for the Benzinga Pro platform. We're waiting on the jobs numbers. So let's just take a look at the big picture right now and take a wide view. And then, of course, we have to realize where our biases sit so that we can make sure that we're trading with what the market is telling us, not where our bias sits. So again, we're looking at the wide range. Yesterday, we kept rising, and we kept rising because a lot of people were thinking, hey, these are overbought conditions, I'm going to short. And so people continued to short. As price action moved to the north, they'd have to buy their orders back, pick another step, continue to short, buy their orders back, and so on and so forth. That happened 2 days in a row. It happened on the day of the FOMC release. It also happened yesterday at the very top of the range near 42.10. The market absolutely ran out of buyers. Absolutely. They just said, I'm done. And then the sellers came in. And what the sellers did was really pull the market down into support zones. So where are those support zones? 41.62. That's where we started bouncing this morning. When we pulled all the way back, as soon as we got up over 41.62, we started running again. That's really going to be the floor that we're going to look at for the ES. And if you want to look at the wick, the pre-market wick, down here, what is that number? 41.52. So you've got about 10 points of slosh there. My thought is if you get in at 41.62 and it loses 41.57, it could go all the way to, 41.50. So better to get out, take a little nip and leave, or just wait for it to pull back and hold. Here's the thing, folks. If we can't hold 41.62, we're going to try and test the 41.52. That's where the real rubber's going to meet the road. The moment it loses that edge, it could cascade and pull us back down into the prior month's close. Because we have the job numbers coming, the Fed's going to do what the Fed's going to do, but how the market responds is going to be key. Now, the Fed said, hey, listen, we're seeing what we're doing going to work. We also know that what we've done hasn't really fallen into the broad market yet. And so we're going to keep on this slow pace, and we'll have another rate, 25 basis points, and we'll look at it again. All right? So from this, people are thinking, oh, yes, the Fed is going to pause. But the Fed is not going to pause. What people are anticipating is that the Fed gets backed into a corner and they do the same thing that they've had to do when the economy gets into a crisis mode, and that is take us all the way back to zero. And I heard somebody say yesterday that they were thinking negative interest rates. Good grief, I sure hope not. But this is why the market is pushing up under all of these doom and gloom things. Big money is trying to front run what's going on with the charts. Now, yesterday, if you follow my Twitter feed, you'll notice that I put up an extreme reading. And the extreme reading says that there were many more new weekly highs than weekly lows. If that number gets bigger than, say, 1,700, it's telling us that the market is skewed and a lot of things are moving very hot. Of course, we can see that. We've seen some really janky looking stocks that have just run up 20, 30, even 40% in the month of January. Folks, that's not normal. And so what we have to do is temper what we're looking at. Realize that price action is grinding forward, but could easily collapse in the coming days. I want you to be very careful about what you're doing. Listen, there's money to be made in the market every day. None of it's easy money, but there's good money to be made. I'm just not sure this is sitting in one of those spaces. The NQ had bid-ask spreads yesterday into the close that were 10 points wide. Liquidity absolutely evaporated. at these levels up here. And so what we have to be very careful of is a rug pull on the way up, all right? Because it's all great if you buy and everything's going up, but if you buy and all of a sudden there's nobody to sell to, therein lies the problem. Notice the Qs doing much better than the ES. They are well above the close, but that's the number you're going to want to watch, 12,670. All right, let's take a look at SPY. See how SPY did yesterday based on our numbers. You know, these are the same numbers we have. A lot of folks are looking at 420 as the next leg. Not unreasonable. 1, 2, 3, 4, 5, 6 months in the recent past touching that level, and we are well above areas that we haven't seen since June of last year. So things are really heating up from this space. But as you recall in yesterday's video, I said pay attention to what's happened the last couple of times we've come into this region. We've had 2 weeks and then another sharp fade. So, you know, maybe history rhymes, but we'll see. What we notice here is that we are in a space of heavy congestion. Traders are probably going to argue in this environment, but they're going to argue until they stretch into the top. Pullbacks or buy zones together, folks. The moment you lose the open of the prior day, you're going to really run into some trouble. They had that overnight. It dipped into the high of the day before that, and it moved forward. Now we're looking at what the price action does in this space. So today we're looking to be long if we're above 416. We're looking to trim our longs at 414. Pullbacks are going to be buy zones. If you're quick on the trigger, you can short. All right. If you're interested in trading what we're seeing, I've had a couple of days just sitting watching this motion because it's not telling me how it's going to resolve. And because of that, I've been very tentative about where it is that we position. As the days pull forward, we'll know what to do. Fridays have been bearish all year long. Is this the Friday that breaks the trend? I have no idea, but we know what levels we're supposed to keep on our radar. Lastly, we'll take a look at the Qs. Qs, I mean, gap, we're going to have to watch about that. A lot of congestion. Yesterday's open somewhere around 307. Yesterday's close 311. That's what we're going to have to watch for. Above there, we're in good shape. We buy the dips into that number, stay long. Below there, we might get a little sloshy. All right. And again, the numbers are going to show up in about 25 minutes. I wanted you to have these levels here so you could see where the chart would either fade into, that would give you a bounce, or bounce very high so that you could begin to take some profit on the long side. All right. Take care, and I'll see you all on Monday.